please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, this is the show where we'll highlight a whole host of buzzing stocks. I'm Nigel D'Souza, and with me is Manglam Malu. Hey, Manglam, we were bound to start in the green. Right. We started off in the green. We have come off the high point of the day. But as is the case with the other Asian markets as well, they were trading well in the green. They've come off a tad bit, so just keep an eye on a few of those markets. By the way, the Hang Seng is still holding with a gain of around 350 points. But the Nifty, yes, we're holding with a gain of around 15 to around 20 points. So we're relative underperforming today. But thank God for ICICI Bank, because if not for that one, we would have been down and we would have been in the red for sure. Pull up a contribution chart, that'll tell you the picture. ICICI Bank sitting with a gain of around 6.5%, and a contribution chart will tell you that we're up close to around 13 to around 14 points only because of ICICI Bank. If we didn't have ICICI Bank, we'd been trading in the red, and we'd be giving the mid-cap index as well company down, so we should keep that in mind. Up 30 points, so we would have been down effectively 15 points without the ICICI Bank.
Absolutely, that's as far as the Nifty is concerned. But if you take the contribution chart of the Nifty Bank, ICICI Bank is doing much more than the kind of loss that Kotak Mahindra and HDFC Bank are. So they're taking away about 110 points. ICICI Bank going ahead and adding about 270 points. But the interesting part is the mid-cap space. The advance decline ratio still in the favor of advances, mildly higher, the green line, but a couple of stocks, they're taking it on the chin. The likes of United Spirits, that one should come for you. That one's at the low point of the day. We have TVS Motor too. That one has suddenly moved lower from the high point of the day, so both of them should come up for you. And the one stock that's actually doing well is Inox Leisure. Remember, day before yesterday, we got PVR's numbers. They showed a 37% ad growth. Inox numbers came yesterday, and they showed a 58% ad growth. So over the last 4 quarters, Inox Leisure's ad growth has grown much faster than PVR. Remember, PVR is a higher base, but increasing ad growth indicates strength in the brand. So that is something we'll be watching out for, and the valuation gap narrowing too. So Inox up about 7%. But first up, all the top stories that we're tracking at this point in time. ICICI Bank, that one surges in trade after the private sector lender reported better than expected core operating performance. Upfront stress recognition took the sheen of a steady fourth quarter, but brokerages, they give a thumbs up to the balance sheet cleanup.
And PNB Housing cracks in trade after private equity firm Carlyle is reported to have sold 80 lakh shares at a base price of around 1,280 rupees per share in today's trading session.
It's a poor set of fourth quarter earnings for Tata Coffee. Shares slipped almost 6% after reporting a drop of 86% in the net profit. Management says extreme and abnormal weather conditions have hurt their output for Tata Coffee.
And the street expects a blockbuster set of numbers from Jubilant Food. CNBC TV18 poll pegging the same store sales growth to come in at around 20%.
And in a spate of weak results, Trident Tube Investments both report 50% cut in their fourth quarter net profits, while Shalby Hospitals reports 14% margins, which is below what the street was working with.
All right, then keep an eye out on a few stocks. KPIT Technologies, that stock has spiked up in today's trading session. It's up with a gain of around 3.5%. So that's doing a relative outperformance. And keep an eye out on a couple of these names. JSPL as well as SAIL. Remember, the street is bracing for a very strong fourth quarter set of numbers. Now, just keep both these two stocks on your radar, because today they opened up more or less flattish. Yesterday, in fact, these stocks were running along, and today as well, they moved high. I'll tell you why. There's been a bit of a price increase in the month of April. It's followed up with May, and that's fairly positive because input costs are not going up that much. So you have the raw material costs like iron ore, that's fallen from around $72 per ton to around $62 per ton. You have international coking coal prices as well. That has fallen from around $250 on a per ton basis to around $195 on a per ton basis. So lower raw material costs, higher selling costs. That's good news for these stocks, and that's why some of these stocks are running away as we speak. And remember, the street is expecting good set of numbers, so just keep that in mind. That could be a bit of a rally, but let's see how these stocks react on results day. But let's get in Ashwini Gujral then. Ashwini, how would you trade the Nifty? We're trading with a gain of around 15-20 points odd.
See, the important point is to forget about ICICI, because that was yesterday's story. I think today you have global plays which are moving much better. So IT index is finally getting into the green, and IT stocks, as you said, are moving higher. Also metals which were in the negative have moved up strongly into the positive. So on IT, you can look at the mid-cap ITs, NIT Tech, Tata Elxsi, even TCS is moving up. On metals, I think JSPL has just gotten out of previous day high. So there you could have support. And also Reliance continues to move up. So out there you are getting a nice intraday dip. These are things that we've just got onto. But overall, I think today is not a domestic day, and today the export-led sectors or sectors which are global, that may work out much better. So Tata Elxsi is a buy with a stop of 1160, target of 1210. Mindtree is a buy with a stop of 1025, target of 1065. And Hexaware Technologies, that's a buy with a stop of 390, target of 405.
All right, you say that this is not a domestic play. Ashwini, looks like you're definitely traveling, because two stocks which are buzzing as we speak. Cox and Kings, that one should come up for you, buzzing with high volumes, about 1.5 lakh shares, closer to the high point of the day. And when you travel, you also take the bags. So VIP Limited, that one should come up for you. That one too has moved to the high point of the day, this time with volumes of close to around 2.5, 2.7 lakh shares. So any view on these two stocks?
See, whether you call it consumption or travel or global sector, I think the bag space, VIP, etc., they continue to move higher. Cox and King, Thomas Cook, for the last 5 years, I've seen them around 200, 250. They don't seem to move as well, although lots of people are traveling. So I'd much rather go with the bags.
If you're traveling, going with bags, then you need to fill it as well, right, Ashwini? What about United Spirits? What's going on there? We're trying to search for, the fundamental news. Maybe someone is saying if we come to power, then alcohol get banned and all. So we'll wait by for that. We don't know as of now. But the stock is clearly sensing something. It's moved to the low point of the day, 2.5% lower. Is that a trade here?
See, it's moving sideways after a big run from 1800 to 4000 almost. This year is kind of sideways. I don't think it's really planning to make new highs here. So I think at lower levels around 3050, 3100, it finds support. I think at higher levels there's a bit of selling. That could have a bad day today.
All right. I don't know whether he's buying stuff from duty free or not, but Radico Khaitan. So it seems like a lot of those United Spirits drinkers have moved to Radico Khaitan, because that stock has moved to the high point of the day. So we'll definitely keep an eye out on what's happening in that space. But with that, we'll slip into a short break. Okay. What's he saying? All right. Welcome back. Now we have Philatex India. That's the stock on our radar. After reporting a goodish fourth quarter, the stock is absolutely flat, but we'll discuss more with the management. Mr. Madhusudan Bagheria, the chairman and vice chairman and managing director of the company, joins in. Mr. Bagheria, you've done a 24% growth in FY18. You've gone ahead and guided for a 35% revenue growth in FY19. So could you explain to us where exactly is that coming from? New capacities, how much will that add to that 35% growth that you're expecting? And how much of that will be price and volume?
Yeah, good morning. Last year, we just commissioned a bright polymerization capacity, and the growth which we have guided will basically come from that. Okay. That's a 300 tons per day volume we have commissioned. All
right. Mr. Bagheria, you're saying 300 tons per day is what you're targeting for FY19?
Yeah.
Okay.
That's the volume which we had commissioned the new facility in last year in March.
Okay, tell us more, sir, about this particular facility, the Bright Stream facility. In FY19, what kind of revenue can you see, particularly from this unit? And in FY20, will it be ramped up further? That's the first part. Second, in terms of margins, I believe you get better margins on this product. Is that correct?
Yeah, usually we get 1 or 2% better margins in Bright Stream, and almost 80% utilization we'll have it in FY19.
All right.
And we'll ramp it up to around 90-95% in FY20. So the top line, it should give around 750 to 800 crores of new top line.
In what, 19 or 20?
FY19.
FY19. Oh, so the entire growth is going to come in from this itself?
Yeah.
And your blended margins will go up then, I believe. I think in the last year you had done margins of around 8.15%. So what kind of margin numbers can we look at for FY19?
The margins basically depend on the raw material prices also, because we get a fixed delta margin. So if the raw material prices go up as a percentage, the margins would drop. But at the constant number, I think we should do close to 10%.
10%.
10%. So, okay, fine. So that means the EBITDA is likely to double from here, given your guidance. Mr. Bagheria, you know, you spoke about the raw material prices. Crude prices are hovering around that $75 per barrel mark. The rupee has weakened a fair amount, about 5-6% in the last 3 months. Does that impact you adversely? What kind of downside risks that there are for the margins?
Yeah, the crude prices affect the raw material, but it doesn't affect us adversely, because the next fiber, which is competition to the polyester, is almost double the price.
Okay.
And the crude effect is just 30% on the total cost of our production.
All right. Mr. Bagheria, you're sounding quite confident. One more word I wanted on the top line. You export some part of what you produce. If you could give us a revenue mix.
Close to 20% is our exports and balance local.
20% is exports, 80%. So we have a fair idea, sir, now about your business. Top line, you should do at least around what? Around 2,700 crores odd. You did 1,900 crores plus 750 crores odd. So around 2,700, 2,800. Margins of around 10%. That will be around, so you'll do around 270 to around 280 crores for FY19. So we have the broad details. Just a quick question, sir. On your debt in your books, now, I was looking at it, you're paying roughly around 12 crores on a quarterly basis as interest cost. And in the last year, you paid around 45 crores, but that in fact had a one-off as well in that. So what is your debt in your books? Did you reduce any debt in the last year? And do you have any plans of reducing debt going ahead?
Yeah, last year we have reduced around 55 crores. And this year we plan to reduce approximately 100 crores.
Okay. Total debt in the books now?
Around 630.
After the reduction?
No, after the reduction, because last month only in March we have completed expansion project, and so debt of that has also come in.
So what exactly is your borrowing cost, if you could explain to us? Because it seems as if it's around 9-10%. Is it?
No, actually the finance cost which we show also includes banking charges and other things. Otherwise the interest cost would be around 5 to 6%.
5 to 6%. From where are you borrowing, sir? 5 to 6%?
No, we also have a foreign currency loan on the machinery is imported. That's why the blended cost is less.
So of the 600 crore, how much is foreign currency? How much is domestic currency?
Foreign currency would be close to 225.
Okay. So you will have to pay a little more, right? Given the rupee has become weaker.
Yeah, we'll have to pay.
Okay,
but most of it we had just borrowed in March only in euro, and the euro is roughly at the same range what it was in March.
Okay, all right. So you're guiding for your debt to come down by around 100 crores, and you're borrowing at a blended rate of around 5 to 6%. Final question, sir, from my end before I let you go. Your promoter holding is 58%, correct?
Yes.
But you have around 43% that is pledged. Where is it pledged? Why is it pledged? And will you release this pledge?
Mostly it has been pledged to the bankers as a collateral only for taking the term loans and the working capital loans.
Okay. But will you release this pledge going ahead if things are going to look so good, top line growing by 35%?
We'll get it released from our bank.
In FY19?
Not in FY19, I think maybe in FY20.
But you are repaying 100 crore worth debt in FY19, so will that not entail a release of some pledge as well?
Once we are able to give the results of FY19, then only we can ask the bankers to release.
All right, fair point, Mr. Bagheria. We'll keep an eye out on your revenue growth, especially your margins as well, given the higher contribution from your bright plant.
Markets holding in the green, but let's get straight to our next management. Manpasand Beverages, that's the other stock in our radar on the back of the tie-up with Parle to distribute brands in Gujarat as well as other western states. To discuss that and more, we have Abhishek Singh, the director of the company, who joins us. Hi Abhishek, thanks so much for joining in. If you could give us a few details about this particular tie-up with Parle, why are you doing this? What kind of incremental positives can it bring to your company? And are you paying any money for this? Is there any outflow?
See, we wanted to increase our distribution footprint across the country. And there is no better player than Parle for this project because they are present themselves in 6 million outlets.
Okay.
Whereas we are hardly present in 4 lakh outlets. So in order to gain significant numbers of outlets, we thought that let us partner with Parle products and let us gain more and more outlets.
So are you paying something to Parle for that? Because they have 6 million outlets. Why should they tie up with you?
No, it is some kind of joint promotion scheme wherein the consumer will be getting both products together. We are not paying anything extra for using the distribution channel.
So you will basically give Fruity with Parle G biscuits. Is that right?
Mango sip with Parle.
Yeah, that's what we meant. All right. Yes. So, you did this earlier in April as well, and then there was an announcement in September. For the largest time, we've been seeing similar announcements. What exactly were they, and how is this one different?
See, we initially in April, in previous year, we had done a small pilot project. We had conducted some few pilots in few outlets in selected areas of Eastern India. And when we tested success there, we jointly thought that now it is the time to take us in our main markets, and now let us expand in Western India. So after Western India, we'll be planning to open up entire country also.
All right. Abhishek, give us your revenue breakup, geographic breakup as of now.
As of now, along all the 4 zones of the country, our revenue is coming almost equal. We are somewhat lesser in South, and we are building our distribution down in South India also.
Okay. So we can go with the 25%, otherwise for East, West and North?
Yes, and a little less for South.
Little less for South, okay.
Okay, and 80% of your revenues come from Mango Sip. What's the plan of diversifying your product mix from there? Because you have Fruit Sap, Jeera Sip and all of that. What is the actual revenue that you get from all these 3? Mango Sip, Fruit Sap and Jeera Sip?
See, Mango Sip, as you told, you are very correct that I am getting 80% of the revenue from Mango Sip, and rest all 20%, around 18% is coming from Fruit Sap. And Jeera Sip, hardly we have introduced latest only in market. We are piloting it in all the big bazaars of the country. But as far as we have seen in data and we have analyzed, there is huge scope for our mango drink. And mango market itself is a huge market. So we are on a mission that if we can cover these 2-3 million outlets more with our Mango Sip brand, it will be a huge growth for us.
You have the production for that 2-3 million outlets. So what exactly is your current capacity, utilization, and are you? I see a high amount of capital work in progress in your books as well. So tell us a little about that capacity, and what does this basically do to your revenue? Because you're talking a manifold increase in distribution from 4 lakh, it goes to 2-3 million. So is that the kind of impact we'll see on your revenues as well?
Of course, currently our manufacturing capacity is around 150,000 cases, and we are in process of building 3-4 more factories. And once these factories are operational, our total capacity will be 350,000 boxes plus.
By when?
In the next 6 to 7 months.
So you'll be doubling your capacity, so revenues as well will double, isn't it?
Yes, we are aiming for that.
Okay, you're aiming for that. Let's hope it's a good sip, not only for your customers, but also for your shareholders. Your shareholders would like to also understand what about the contribution coming in from the railways. If you could help us out and break that up also zone-wise.
See, railways last time we did around 20%. Okay. And since now we are building our distribution deep down the rural areas also, along with Parle. So I think that we'll be concentrating much more on these rural outlets, on these urban outlets, which we are getting all these new outlets from Parle.
Okay.
So our focus right now will be to get pure distribution.
Okay, I'm looking at your tax expense, Abhishek. Your effective tax rate is what, 10 to 15%. Are you guys having factories in tax-free zones, or what are these tax benefits? Why do you pay just about 10 to 15%?
No, it is industry trend. Any beverage player in the market, if they are making fruit drinks, they will be paying 12% of taxes. So it is all normal.
Okay, so
it is all properly documented and accounted for.
Okay, so you're saying that the tax rate going ahead as well is likely to be this 10-15% itself.
Yes.
Okay, Abhishek.
Around 12%.
Abhishek, a lot of your shareholders, they would be listening into you. Your stock as well has moved to the high point of the day as we speak. You're sounding positive. Capacity will double, revenue will double, distribution is improving. Can you increase your dividend payout at some point of time? And when do you plan on doing that?
See, we will take each and every step necessary for the betterment of our shareholders. And whatever things are required, so as per time, we'll do all that. We'll take all that steps.
Are you planning to raise some more money?
Not currently, not right now.
So totally capitalized. You have all the money for this expansion that you're talking about, distribution, etc.
For all these expansions, we have managed, we have arranged all this money and everything. Our pockets are full right now for getting all these factories started.
All right, we wish you good luck and say cheers for all the mango drinkers and fruits up as well. The stock at the high point of the day. We'll keep an eye out on how this goes by, given the management is guiding for massive capacity expansion and multiples in terms of their distribution expansion as well. But